Hello and welcome to this channel where I talk about trading in the crypto market. I am going to show you guys how I enter these trades, what I look for before entering the trades, and most importantly, some of the rules that I never break. Welcome back guys, so today we are going to be looking at a quick update on BTC once again. And based on yesterday, I explained to you guys why I think we are bearish and why I think we should stay out of trades for a while now because of the different signs that I've seen on the weekly and based on the greed and retail traders. Keep in mind that I trade my basis off the SMC method, which is focused on how the big institutions and the big capital institutions trade. So as we can see here, the price finally broke off the trend line, which is the first indicator that we are going bullish. We are going bearish, especially on the short term. Based on the RSI, we can see that it crossed right on that point when it broke the trend line. That's when we are fine. We are bearish, and as well as the MACD indicator, when the line crosses down this area, it means that it's bearish. Although there are certain points that I would suggest to watch out for, maybe a quick little bounce back up, like this one. This is going to be the first demand zone I would be looking at, right there, and definitely the one down here. These are huge selling points. By the way, on a bigger time frame, this whole thing might be a demand zone. So if you were going to enter, I would suggest entering on this right here, but at the same time, your stop loss should be on the lower, based on the lower box, something like that, with a 1 to 1.5 ratio, somewhere there. That would be the most decent scenario I would suggest. This is the demand zone. Now, this is clearly what we're looking at, but I have to mention that price might be trading. Like you can see, price was stable and then it went down. From here, I am not expecting price to straight off come down here or come down here. Price can be trading in a range, but then at the same time come down. Maybe you'll see a little price action on and then come down and then up. I do feel that it's very unpredictable at this point in time, which is why I am telling you guys to watch out. We can also have a look at the fear and greed indicator. As you can see, it is still in 68, which is greedy. And of course, based on the bigger time frame, everything is bullish, which is why the retail traders, which is majority of the market, are greedy and wanting to hop in and ride the bull run. Don't get me wrong, I still do think that it is bullish in the long term, but I am expecting quite a rejection coming up soon. We can see on the one year greed and fear index, we are almost at an all-time high. Oh, we actually are in the all-time high currently right now. A lot of greed coming in, and fear is creating FOMO, which is fear of missing out. A lot of people will want to come in, and this is the big money for the institutions. A lot of them, let's say for example, me being a retail trader, we see a little price dip and everyone's talking about how it's bullish. Shit, we might break 40k, 45k, even this basically is 30k, 35k. I'll just hop in right now, ride it all the way up, right? But what people don't understand is that's not how the market works. We are mainly controlled by the big institutions because they hold all the capital and the volume. So now knowing this, big institutions who are holding a lot of the capital, from here, when they see a lot of volume of buys coming in like that, they'll drop the price. And from here, this is where they're going to enter their selling point. From here, all of these people that wrote it up lost money. They had to fill in these demand zones to make their money back from when they went against price. And at the same time, since they shorted from up here, boom, they made a lot of the money. So what I'm trying to say is, sometimes just don't look at your own personal perspective and look at how the big market institutions are playing this game. We can take a look at ETH, and I'm pretty sure we can expect the same thing. Hold on, give me one sec. Let me just clear that out for you. Yeah, so see, based on ETH as well, after the way Bitcoin moves, ETH is always the next to follow. So as we can see, price just recently broke off, while as for BTC, there was already a big price break off. But for ETH, it just broke off, and the MACD is just starting, so it didn't even completely break off yet. But keep in mind, BTC being the biggest holder, or not even the biggest holder, sorry, it's the largest volume or the largest price of coin, that would mean it holds the most power in the point where, let's say BTC is going down, people think it's bearish. Everyone in their other holdings of their other coins will all try to get out as well, because they think, oh, BTC is going down, everything else is going to go down, so they'd all hop out. That's a mindset of a very common trader. So here I've marked out some demand zone points that I think we should look at, because I am definitely seeing, just like BTC, expect everything to come down for quite some time and then expect to move up. Just like this. Don't keep in mind that also when I'm saying we're expecting rejection, do not expect it to come like this. Maybe it will be there within a week's time or a certain amount of time, but price may trade in a form where, let's say, it's still bullish and then it's slowly going down. But of course, people might think it's a fake. But what I'm trying to say is, here at this channel, we always try to maximize whatever amount of profits, or it's not even profits, but minimizing loss. And any certain prediction of where you can see a certain loss is something we try to avoid. I think I've also shown you guys the box method of how, even at this point, this big sell here, is actually one big demand zone, which would mean that price is still expected to come down to this line to mitigate this whole thing. Only then can they go up. By mitigate, I mean by filling up this supply zone, because this point was when a lot of the big institutions sold and they still had their buy positions in. So they would want to come down here. They made a lot of money on the sell. Now, on their buy trades, though, they need to come down and break even it, because big institutions, the fact that they control the market, would mean that they have too much power to the point where they do not end up losing money. So we should keep in mind that it's big opportunity, or not even opportunity, but it's a big possibility. Whenever we look at how, or we try to predict how the institutions trade, to me personally is the best way of trading, because they're the ones that control the market. I just wanted to give you guys a quick update on what I think is gonna happen, and I hope you guys enjoyed. See you guys in the next one.